guys, thank you for joining me for episode lucky number 7 of Odds Are, your weekly S&P options forecast. I'm your host, Chris Torres. So last week we said that there was an almost 96% chance that the market would breach one of the two breach points because in the previous week it did not breach one of the breach points. Well, the market again did not disappoint. In fact, we got a double breach, which we'll talk about a little bit more later on in the show. But let's take a look here at the forecast for last week and where the market landed. All right, there you go. You can see that the market did in fact breach both the lower and the upper breach point, and the market stayed just within the expected settlement range. Still inside the range, but just right up against that upper limit right there. It did not breach the parabolic SAR, and of course that will move up this week. And we're going to now take a look at the moving averages. Everything still stayed the same. We're still in green mode all the way across moving averages, short term, medium term, and long term. Again, the market is still pushing up against those upper limits, and we will see if it sustains there. It has not been able to break past that 4,000 mark. We still have that magnet effect, so the market may still be being drawn to that number until there's enough evidence to the contrary to push it down, or enough support to make it break up past that 4,000 psychological barrier. All right, so we're going to take a look now here at the breach points for this week. The breach points for this week are set at 3881 on the lower breach point and 4,006 on the upper breach point. So again, above that critical 4,000 level. We'll see if we're going to be able to breach that point there. And then the odds of those breaches are going to be 81.24%. Let's take a look now at the parabolic SAR. As expected, the parabolic SAR went up a little bit. It actually went up about 18.5 points to be at 3811.5. So just inching up along with the market. And so if the market were to drop down below that 3811.5 mark, that would be a very, very, very bearish indicator. That's a big drop for it to get past that point. I'm not expecting it to go down below that point this week, but still something we're going to keep in mind here on the charts. And then of course we're going to wrap it all up with the expected settlement range. Now the expected settlement range for this week coming up is going to be between 3854 and 4032 or 4032. Again, above that 4,000 point on the upper limit and below 3,900 on the expected settlement range on the lower side. Both the breach points are within the expected settlement range. So 3 weeks in a row now we've had that same setup. And now the parabolic SAR is well below both the lower breach point and the lower expected settlement range. So again, that's why I'm not thinking that we're going to be seeing a breach of that parabolic SAR in this week ahead. But hey, I could be wrong. Markets are going to do what they're going to do. All we can do is prepare for it, right? All right, we're going to take a look now at the relative view. That's going to combine all of these different key points. There we go. You can see that the blue line indicates we're already closer to the upper points, both the breach points and expected settlement range. We got quite a ways to go to hit those lower points, and you can see there where the parabolic SAR is well below both of them. Still well within the Bollinger Band range, and nothing really indicating one way or another. I mean, we're pretty much at a standstill. The market has gone up and down in the last couple of weeks and is still in that mode where it's waiting for an impetus to really drive it into a more directional state. Right now it's very much range bound. It's just kind of just chopping up and down, but eventually that's going to give. And so we're going to take a look at the section that I love the most, which is didn't see that one coming. Now, 2 times in a row already we've had a week where we had no breach of the breach points, and then we already expected there was going to be a high probability that we would have a breach in the following week, but what we didn't see coming was that we would have a double breach, meaning that the market would breach both the lower and the upper breach points in the week following the week where there was no breach. That's happened 2 times in a row already. To give you a little bit of perspective, 16.8% of the time, right? So let's just round it up to 17. 17% of the time when there is a no breach week, the following week has a double breach. So it's not a very, very common thing, right? And so for it to happen 2 times in a row, that for me is statistically significant, and it says, hey, you know, the chances that this happens 3 times in a row when it doesn't happen very often to begin with is pretty low. Now, whether or not that's going to manifest itself into a potential trade opportunity in the future is yet to be seen. It depends on where the starting point is. But what I'm thinking about is that the next time we have a week with no breach of the breach points, in that following week, I'm going to guess that we're not going to have another double breach, which again may be a trade opportunity. If it breaches one of the levels, then you can pretty much discount the fact that it's going to turn back around and breach the other one. Again, nothing's promised, but based on the historical tendency of this market to not do that very often, the fact that it's done it 2 times in a row, I don't think we're going to get 3 in a row. So keep a lookout for that. Watch that. Same thing as we always do whenever we have a double breach, we always look at the pattern. And so the market breached the lower breach point first and then breached the upper breach point. So closing out the week on a positive note with some support going into this week. So again, the combination of that with the magnet effect of the 4,000, I think there's a good possibility that this week we may actually breach that 4,000 mark. Whether we stay above it or not is to be determined, but I think we have a good momentum going into it to reach that 4,000. We'll wrap up now with the quote of the week, and the quote of the week is by someone that most traders have at some point either heard of or read some of his material, and that's by Mr. Jack Schwager, the author of the very highly rated Market Wizards series of books. And so what Jack says is that the hard work in trading comes in the preparation. The actual process of trading, however, should be effortless. Now, for us that look at the market from a statistical point of view, from a quantitative point of view, that should ring true for us more than anyone else. Now, if you're a discretionary trader, that's okay. I won't hold it against you. There's a lot of people that make money trading discretionary positions or models, and there are people that use fundamental analysis, and there's all types of ways of trading the market. But what I get from this quote is that if you have a system in place, if you have the research, if you have the confidence, if you have the risk management, steps and guidelines in place already, then at the end of the day, all you have to do is push the button, right? You should not be at the screen watching, waiting, and trying to figure out what you're going to do. Have a plan, have it already in place so that when the time comes to seize that opportunity, all you have to do is take it. So keep that in mind. Enjoy your week. Have fun trading the markets, and we'll see you guys back next week.